Welcome back to Alpha Recap. I'm glad you joined us. We're looking back at the trading day that just finished and unpacking the biggest moves and what they mean for your portfolio. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots of fireworks in the microcap corner today. Some huge percentage moves and a lot of noise underneath them.
So, what really stands out here is the sheer volume behind a few of those moves. Let's start with the most convincing rally of the day.
Right. The one that caught my eye was MGRX. It jumped to about 53 cents, up roughly 49% on about 342 million shares traded. That kind of turnover is hard to ignore.
Hold on, say that again. 342 million shares?
Yeah, about 342 million. When you see volume like that, it suggests broad participation rather than a single odd trade. That's why we call it a volume-confirmed rally.
And then there were dramatic percentage moves elsewhere. AIDX more than doubled, right?
Exactly. AIDX soared about 111% to roughly $23.85 on about 35,000 shares. That's a massive one-day return for anyone holding a concentrated position.
Big move.
But volume was much smaller compared with MGRX. So the context matters.
We also saw some painful sell-offs. MBRX and ALIT were hit hard.
Yes, ALIT plunged to about 80 cents, down roughly 39% on about 98 million shares. And MBRX fell to about $2.68, down about 44% on around 2 million shares. Not a great day for holders.
Wow, forced selling or news-driven. Is that usually what you think when you see heavy volume on a drop?
Often. Heavy volume on a drop can mean forced selling, margin pressure, or a liquidity event. It can also be a reaction to news. But today, many of these names moved without clear filings. That's the troubling part.
So we have both sides, huge, volume-backed rallies and thin market explosions. How do you distinguish between them quickly?
You filter for volume first. Is the move accompanied by meaningful turnover? Then check for confirmed catalysts like SEC filings, press releases, or trade halts. If volume is high and there's a filing, that's more credible. If volume is tiny, treat it as noise.
Quick reaction.
Right.
Give us a few more examples from the tape so listeners get a feel for the pattern.
Sure. RMSG and its related security, RMSGW, both rallied. RMSG climbed to about 89 cents, up around 50% on roughly 30 million shares. The warrant-style security also moved, which often signals corporate structure-driven flows or common catalysts affecting both instruments.
And then there were the tiny dollar moves that look dramatic on paper but are thin.
Exactly. For example, GIPRW jumped to about 6 cents, up roughly 48%, but that was on only a couple hundred shares. BEATW was up about 50% to roughly 14 cents on about 10,000 shares. Those are classic thin market swings. A single order can move the price a lot.
Yeah, exactly.
I mean, when you step back and look at this, a 50% move on 200 shares is fundamentally different from a 50% move on 300 million shares.
Short segment reaction.
Totally different.
Okay, let's pause and explain volume-confirmed rallies in plain English for listeners who are newer to this.
Good idea. Volume confirmed means the price move is supported by lots of trading, many buyers and sellers. That usually indicates real interest or a coordinated flow. Thin volume moves are the opposite. The price can jump because just a few orders changed hands, and that tends to reverse quickly. So, in short, big volume equals more credible. Tiny volume equals higher risk.
Nice and clear. And one practical tip for trading these names?
Use limit orders and size small. Treat sub-dollar names like they can break your execution. If you do trade them, size for illiquidity and wait for confirmatory volume or filings before scaling in.
Let's talk about weekend risk. Markets were closed today, so what should folks watch before Monday, February 23rd?
Weekend risk is big with these tickers. A filing, a trade halt, or an overnight press release can create huge gaps at the open. We'll be watching SEC Edgar, company press rooms, and transfer agent notices for anything on MGRX, ALIDX, RMSG, and the rest. If something drops on Sunday, Monday could be wild.
Quick hits. Run us through the day's headlines in rapid-fire form so listeners can jot them down.
Okay, AIDX jumped about 111% to about $23.85 on roughly 35,000 shares. MGRX surged to about 53 cents, up about 49% on roughly 342 million shares. RMSG gained about 50% to about 89 cents on about 30 million shares, and the related warrant moved too. BEATW and GIPRW had big percentage gains but tiny volume. ALIT fell about 39% to about 80 cents on nearly 100 million shares. MBRX fell about 44% to about $2.68.
That's a lot to keep track of.
Yeah, that tracks. And remember, some of those percent moves are headline grabbing but not necessarily tradable.
Let's get practical. If someone was holding one of those names that fell today, what should they consider?
First, reassess position size and risk tolerance. If you're concentrated, consider trimming or setting protective stops. If the decline came with heavy volume and no filings, treat it as potentially outsized execution risk. If you own both equity and warrants, remember your exposure can be larger than it first appears.
Short segment reaction.
Good point.
Walk me through the idea of suffix-linked tickers. Why does it matter that the warrant and the common move together?
When a company's ordinary shares and its warrant or right move together, it often means a single catalyst is affecting the entire capital structure, like a corporate action, impending conversion, or news that changes the valuation of both instruments. That can amplify volatility because traders and arbitrage desks might be moving both legs at once.
Makes sense. Any regulators or filings we should expect?
If there's a real event, you'll see it on EDGAR, investor relations pages, press releases, or transfer agent notices. Over the weekend, check those sources before the open.
And for traders who like to speculate in these names, what's the checklist before placing an order Monday?
Check volume trends, confirm any filings, size your position for potential illiquidity, use limit orders, and watch margin impact if you're on leverage. Also, set alerts for trading halts or unusual options activity if applicable.
Honestly, I was a bit surprised by how many names moved without confirmed catalysts today.
Same. That points to ongoing retail-driven flows and speculation in microcaps. It's a two-speed market. Some movers had real participation, others were thin market noise.
Which is great for headlines, terrible for sleep.
Exactly. For portfolio managers, the playbook is simple. Prioritize volume and filings over price, size positions for illiquidity, and be ready for headline-driven volatility at the open.
Let's wrap up with 3 clear takeaways listeners can act on right now.
First, volume matters more than percent moves. Trust heavy turnover over tiny trades. Second, if you own these names, reassess position size and consider protective measures. Third, over the weekend, monitor filings and press rooms before Monday's open. A weekend disclosure can change everything.
Perfect. Final quick reactions, 2 short lines each.
Watch MGRX for follow-through volume.
Don't chase thin volume spikes.
Check both equity and warrants if you own either.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the market reopens to follow up on any weekend developments.
That's it for today's Alpha Recap. Take care and remember, size for liquidity, verify filings, and stay disciplined. See you Monday.